Come on. Just give that, thanks. Okay, thanks everyone. So I've got a very large title for the presentation, Leveraging Digital Innovation for Customer Centricity and Corporate Growth. It's a very long title, but actually what I wanted to go through is the evolution of banking and why digital is actually transforming the banking sector in South Africa, but across the world. And if you go all the way back, and I think the primary reason that you have banks is to protect people's money, right? Protect deposits, and it's the primary reason why we have banks. And back in the day, in the 1800s in Italy, you achieved that by having a really big building that was super secure where you kept all the gold. And that carried on for quite a long time until we started to try to get closer to customers. And then you had branches. So you had branches in all the city centers, and even when I was younger, I remember every Saturday, my dad would drive into town to go to the bank branch, right? That's what you had to do. And then ATMs came along. And ATMs allowed you to transact with your bank, maybe not only during banking hours, but 24/7. You could go to an ATM wherever you could find one. And more importantly, it was a lot more dispersed. You found ATMs at petrol stations, at the strip malls, across South Africa. So closer and closer you were getting to the customer from a banking perspective. So where you went from 3,300 branches, ATMs increased that by tenfold, your access. Now you have over 30,000 ATMs in the country that's servicing a larger proportion of the base. People don't have to travel that far. And you went from just withdrawing cash to being able to get statements, being able to see your transaction listings, conducting some transactions. You could do all of this at the ATMs. And the next step was the mobile phone, and smartphones in particular. And the reason why Discovery Bank, I think, launched at the time that we did, was the proliferation of smartphones. And at the last check that we had, 22 million smartphones in South Africa, was you were able to now take your bank, that branch that you had, from the city center to the ATMs, all the way into your clients' homes, right? In their homes, wherever they were, and if the stats are true, absolutely available 24/7, 365 days a year. And I think that's the definition of actually moving directly to the client from a banking perspective, and the reason why digital has fundamentally transformed the banking sector and continues to change the banking sector. But what it actually has done as well is change the typical dynamic. Now in banking, and in retail banking in particular, you had almost a trade-off, right? If you wanted cheap banking, then it came at low cost, but you didn't have the convenience. If you want real convenience, where you had someone come to you with the documents, I think we all went through this at some point, where you had the private banker come through and you could sign the documents in your office and the cards would get delivered to you. That was private banking. But it came with an immense cost factor attached to it, right? Digital banking has allowed us to fundamentally change that dynamic. You no longer needed to have a cost-convenience trade-off. You could actually have the best of both. So what digital banking, and I think the digital transformations that everyone's going through is allowing us to do, is allowing us to, number one, increase accessibility, but secondly, almost democratize private banking for consumers. And I'll take you through a few use cases on each of these to just show you the different dynamics, right? The first one is onboarding, right? To open a bank account, not even that long ago, probably 10 years ago, you either actually had to go into a branch, take your ID document, take your proof of address, take all of your information, your debit orders and everything else, and actually sign up. And then they would process it, it would go back to a head office somewhere, process it, and maybe a couple days later you need to come back, right, to find out whether your bank account was opened, and then another couple days come back for your cards to be ready. This entire process has been digitized now, right? Most banks, I think almost all of the banks in South Africa offer fully digital onboarding. You can onboard a client, and clients can onboard 24/7, 365, wherever they are, and in Discovery Bank's perspective, in less than 5 minutes. And there's a whole lot of tech that comes into play to allow this to happen that is good from a banking perspective. So there's the Document Exchange Association. So as a bank, as part of the association, we can obviously pull all statements that we can for clients to be able to conduct the right levels of approvals from a credit perspective or even from a KYC perspective. You've got integration into the Department of Home Affairs, which uptime is increasing now, thankfully, where you can actually verify identity, right? There's multiple algorithms that you can use to identify whether someone's alive, whether they're actually the person that you onboarding. So you can get way better fraud management and verification from a cell phone than you can from an actual branch. And you can even get much better KYC information. From a geolocation perspective, one of the things that we just launched about a couple months ago was, instead of getting physical statements that said, I live at number 2 Stanton Drive, we can actually ping their phones over a course of a period and verify that that's where they stay. Now, that opens up multiple avenues, right? Not only do people not have to get their landlord to sign a document to say that they live somewhere, or get their ward councillors to say that they live in a specific area in terms of informal settlements, but it also improves access from a financial inclusion perspective. No longer does a wife or a husband need to go to their spouse to say, please can you give me a document to say that I live here, right? They can actually open up a bank account by themselves whenever they want to. So it really does increase accessibility and is a key enabler for financial inclusion. But it also is great for banks, right? From a sales perspective, creating a completely seamless, paperless onboarding journey has significant impact from a client acquisition perspective. And what you see on the right-hand side of your charts there is actually the Discovery Bank sales figures over the last 4 years. So at the end of 2019, when we launched the bank and into 2020, we were roughly onboarding between 150 to 200 clients a day, right? With all of these innovations that you see coming out here, we currently average about 1,000 clients a day. And that's for roughly 3 years later. So all of these innovations are really the things that will allow, I think, banks now to not only give greater access, but also grow their client base. The next one is decreased transaction costs. Now, we all really do want to move to a world where I think payments are as cheap as possible and ubiquitous across the perspective. And from many aspects, I think PayShap is a really great innovation from the banking sector in South Africa. And I think from our perspective, we're really excited that it will actually, I think, be the first step towards moving towards a cashless economy. But there are 3 key enablers that allow this to happen, right? The first one is you need the digital innovation. You need the cell phones, you need the peer-to-peer networks and the identification factors. You need the competition to create the innovation. But I think most importantly is we need regulatory changes, right? You need the ability to actually create this unified structure and get everybody to agree to this single platform. And we've seen this across the basis, right? Where you have the technology, you have the will, you do need the regulation in order to standardize across the base. And you can see this in multiple economies. You can see it in India when they did it. And closer to home, Kenya, right? Everyone's seen the digital payments success in Kenya, but actually the regulatory change that's come in has really created this spike in payments. And what you see is an over 97% increase in payments over just from 2019 to 2020, as they've brought in regulation to standardize payments and across the board. So I think, to Kumaran's point, I think the move to cashless isn't in a single requirement of technology. I think you need multiple facets or multiple parties involved to get it done. But there is a path forward, and there are use cases across the world of this being successful. And I think will really allow us as I think from a banking fraternity perspective, to lower the costs of transacting for our clients and the economy. The next one is friction, right? And what you see here are just some of the costs that you would have to pay if you required statements, bank confirmations, visa letters, PIN resets, if you walked into a branch, right? So that's 45 Rand per statement, and that's 45 Rand for each month, right? So if you need 3-month statements, you multiply that by 3. And you can understand why, right? there's a branch, it's in a mall, you need to pay rent, you have people that's working there that you need to go to speak to, then the bank has to print the bank statements, there's paper, there's ink, there's all of that stuff, and then they have to give it to you, right? Of course it's going to cost something. Oh, and by the way, you can only get this during banking hours. Even on private banking, if you do send it to your banker, you'll only get it the next day, right? With digital, you can get all of this for free whenever you want, right? You can download bank statements off your phone, you can print it at home, you can get banking confirmations, Visa letters, you can replace your cards, you can even pause, change your cards, you can reset PINs, you can do all of this. So you really have now taken all of the core functions that you would have had at a branch and brought it to your phone, and from a consumer perspective, reduce the cost to zero, right? So from that perspective, I think you've also increased accessibility and increased the ability for almost anybody to have access to these banking features that would typically cost a lot more for a typical client that is on one of those pay-as-you-transact accounts where all of these fees do really come into play. So the next element that I spoke about was around democratizing private banking, right? Now these are typically features that you would see more from an affluent client base, but nevertheless increases accessibility and reduces costs, right? First one is Forex, right? Not that long ago, the only way that you would be able to, if you're traveling overseas, is you would call your bank, you'd get a rate on the phone that would be valid for, I don't know, 5 or 6 hours. Bearing in mind, if you're in the treasury, given the volatility that you have, you're going to price that rate up just to make sure you cover yourself. And then someone's going to, if you're in private banking, going to get all your notes together and come and deliver it to you, or you're going to have to go to a branch and pick it up, right? With all of the digital accounts that you have currently, and where you see the Discovery Bank has a Forex account as well, but with other players out there as well that have these digital Forex accounts, you can transfer in real time. The rates are much better because you can actually price in real time as well, right? And the costs, therefore, come down, and the accessibility increases. So what you see on the right is, if you had to, and we did actually do this exercise where we went and priced $1,000 in the market at a given time compared to if we just transferred it in-app into a US dollar account. So if you had to price $1,000, the fees that you would pay alone would be 376 Rand, right? That would be the spread, including the delivery fee. There's a minimum charge based on how many dollars you need to take out, etc. On Discovery Bank, just the spread alone, with the fee on that would be 243, but that spread you wouldn't actually see at all. That would just typically be in your conversion rate. So from a client perspective, you have instant access to foreign currency. You can transact with those foreign currencies when you go overseas. You don't actually have to carry cash anymore, and you don't really need to come back and return that to the bank at an unfavorable exchange rate. You can keep that into your account and actually transfer whenever you want to, which makes, I think, from a banking perspective and an affluent perspective, just a lot easier to transact in foreign currencies now than it was even 3-4 years ago. The next one is share trading, right? This is another element that typically would be available only to private clients. Number one, there's a minimum. Typically, on a typical share trading account, there's a minimum deposit of like 10,000 Rand, right, at minimum. Transaction fees are typically quite high, 4.5%. So you would typically only have clients who had a lot of money that would be able to actually partake in share trading on a platform. Because unless you had high volume transactions and large enough amounts, it actually didn't make sense, right, from a fees perspective. Now you see other fintech players coming into the market, like Easy Equities and other players who offer you much cheaper fees because everything is done digitally, and the ability to invest from 100 Rand or 10 Rand, as an example. Now, from a banking perspective, you can actually integrate all of these features into your bank to offer clients the benefit, and you do see that, as an example, Easy Equities has integrated with us, but also integrated with other banks out there, offering share trading and fractional share ownership to an entire market, and opened it up to people that would typically not be able to invest in these kind of structures a couple years ago. And then service levels. Service levels was always an issue. I showed you that picture of the long lines. But now the world is changing again, right? We have chat banking as an example, and this is something we've just recently launched. We have AI-trained bots that basically can answer any basic question a client has across the board and automatically flip over to a live agent when they feel that they can't answer those questions, right? It allows us to offer clients 24/7 banking services with superior service levels, and anytime we recognize that WhatsApp isn't going, that chat isn't going well, you immediately break out to a live agent who's now at a much higher level, because if you think of a typical call center where you have your tier 1, tier 2, tier 3, we don't need tier 1 anymore, right? You can actually have experts in each field, and that chat is routed to the specific expert. So if you're dealing with a payments issue, you're going to a payments expert. If you're dealing with a Forex issue, you're going to a Forex expert. And you can really create deep expertise within your call center at an efficient level and give your clients superior support. And then you can take it a level further. And this was something we launched actually 2 years ago, where you can have live assist. Because often, regardless of whether you have a document that has all the rules and how the product works and guides and videos, etc. Sometimes clients just want you to show them on the app or on the phone what to do, right? Which is really difficult if you're not there. So from a banking perspective, what we have now on our app is the ability for our agents to actually have a little pointer that appears on their client screen. So when they log onto the banking app and they initiate a session with our live assist agents, our agent and the client sees exactly the same screen on their phones, with the difference in that all numbers are blurred out for the agents, right? So they can't actually see any personal information, and then they can actually guide the client through the app. So you want to make a payment and you're not quite sure how to do it, this agent can actually guide you through the app to say, tap on the right corner, we will show you exactly what to do. Press these buttons, select this option, go through this process. So you really are creating an avenue for superior service from your client perspective. And what this actually is doing is creating an environment where you can create ecosystems within the bank, right? And you can see this over and over, and I've got 4 ecosystems that I want you to talk about. The first one being home, right? There's the typical bank assurance model that all our financial institutions follows, where you offer the mortgages, you offer a home loan protector, an access facility, and home insurance. But what you're seeing is banks now play in a much wider space. We're offering energy solutions, right? And you see this across all the banks now currently, which offers a couple of benefits, right? Number one, you've got the funding mechanism available to you immediately. Secondly, you have vetted suppliers, and you're increasing the value of the asset that you're actually underwriting at the end of the day. You have other players that have home marketplaces, in-app valuations, and vetted suppliers for plumbers, electricians, etc. And you're seeing more and more with the trust that clients have in banks, that they're relying on banks more and more for these kind of services, right? Ancillary benefits that are actually, number one, creates a differentiator for you in the market, but adds true value from a client perspective. Vehicle ecosystems are the same, right? We've got the finance, payments, insurance mechanisms that are typical financial institutions, but then you also have rewards, repairs, and access to car repairs and servicing departments, licensing and administration, which always comes up as one of the key benefits that clients really appreciate from their banks. Over and over in all the research that we do, it's one of the strange things. I mean, you wouldn't think as a bank that licensing and registration for your car is one of the key differentiators, but it is, right? It's one of the things that come up. And then from a social responsibility perspective, financial wellness is obviously a big topic in South Africa and something that us as Discovery Bank obviously are very passionate about. But the digital capabilities of a smartphone really allows you to do this on another level, right? Number one, financial education. Often one of the biggest issues that you have from your client base in order to get them to actually understand the financial concepts, present values, interest rates, prime, all of those factors. Now, as finance professionals, we all know what those mean, but 90% of the country doesn't, right? we're able, as an example, to offer education programs delivered on your smartphone through videos at a fraction of the cost of what it would cost to actually go and learn this, right? You can watch 5 or 6 videos that explain key concepts and gives you a basic understanding of what it means to manage your finances well. But we all know education isn't everything, because even with education, you actually need tracking and monitoring, and that's really where I think the benefits of digital banking really come into play. Because now you can do stuff like create automatic budgets for your clients, right? We have the Vitality Money Financial Analyzer, quite a mouthful, but what it actually is, machine learning algorithms that actually automatically set budgets for you based on your previous spending habits and your previous income. You can go in and set what you think, where do you want to save money, where do you think you can spend some more, and you can actually basically make a budget for yourself. Research is that pretty much 60% of people do not know how to create a budget, and that's not just in South Africa, that's in first world countries as well, right? So now you can take all of the features of tech and digital and create those budgets on your phone or on your banking website. But then the other issue is tracking this, right? And actually making sure you keep with your budget. And that's where the smartphone comes in use, because what we can do is track this budget in real time, right? So if you're on the second Friday of the month at 10 p.m. at night at a bar and you're already at 70% of your entertainment budget for the month, you would typically get a push notification from our app telling you that you're about to go over your budget, right? Which is really useful rather than finding that out on the Saturday morning with a headache. Right? But it can show you the value of actually having all of these features all together on your banking platform, and features that you wouldn't typically expect a bank to offer you, right? So you can see clients' expectations now are no longer give me the digital equivalent of a checkbook in terms of EFTs and keep my money safe. Clients want a lot more. They want all of these features. They want a bank that allows them to actually improve their finances, manage their home, get their vehicle licensing sorted out. They want all of these features together, right? And probably the one which is the most surprising, right? And this comes out of all the research that we do as well, is that banks actually clients see banks as a place for travel, right? Through, I think maybe from a bank's perspective, through the rewards programs that have been set up across the board, clients will move bank accounts if they get better travel benefits, right? And we see this coming out, and which is why we set up an entire travel ecosystem within our app, where you can book flights on the app. You've got fast track access when you go through the airports. You've got accommodation bookings, and you've got packages. But clients actually do look at their banks for these kinds of benefits. And the question is why, right? I think there are a couple of things. Number one, you have the mechanisms to fund rewards. So you can actually offer travel at a much cheaper rate than anybody else. Secondly, you have the distribution network. So no longer do you need to find the travel agent. You know it's a trusted partner. It is it's in your banking app, or it's on the banking platform. You know this is a trusted partner that will offer you good service. You have the lounge access, which comes with most cards, especially in the affluent parts of the market. So you can actually create this ecosystem of travel benefits across the basis, right? So what does this all basically end up? Well, what it actually does is it creates super apps. And that's where we see banks playing currently. We see banks not only providing you with financial wellness and digital payments and Forex and deposits and digital wallets, but you can see banks now moving into a space where we are providing services that you would typically not expect a bank to provide, like travel, like licensing, like solar benefits. And the reason you can do it is because you've got the payments network, you've got the technology, and you've got the distribution network available. And I think that, for me, is the opportunity that you can see within banking, and why digital banking, in our view, is going to fundamentally transform the industry overall. Thank you.